Seminggu yang lalu, ia menangis kesakitan. Sekarang, hanya ada tangis kebahagiaan. 8 hari yang lalu, hidupnya terasa tak ada harapan. Namun siapa sangka, kini harapannya tanpa batasan. 3 hari yang lalu, tiap langkah butuh banyak kesabaran. Kini, ia tak sabar melangkah lebih jauh bersamanya. Saat hidup berubah tak terduga, semua rencana harus tertunda. Untuk itu, Siloam melakukan pemeriksaan dan diagnosis yang cermat menggunakan peralatan terbaik agar Anda pulih lebih cepat. Siloam Hospitals, yang berarti segera kembali. Seminggu yang lalu, ia menangis kesakitan. Sekarang, hanya ada tangis kebahagiaan. 8 hari yang lalu, hidupnya terasa tak ada harapan. Namun siapa sangka, kini harapannya tanpa batasan. 3 hari yang lalu, tiap langkah butuh banyak kesabaran. Kini, ia tak sabar melangkah lebih jauh bersamanya. Saat hidup berubah tak terduga, semua rencana harus tertunda. Untuk itu, Siloam melakukan pemeriksaan dan diagnosis yang cermat menggunakan peralatan terbaik agar Anda pulih lebih cepat. Siloam Hospitals, yang berarti segera kembali. Seminggu.
Okay, good afternoon, ladies and gentlemen. Earnings webinar. My name is Ari Jaja, healthcare analyst from Macquarie Securitas, and I'll be the moderator for this session. We'll introduce today. So Willie, please go ahead and introduce yourself along with the management team that you bring today.
All right, thanks, Ari. Hi, everyone. My name is Willie Chandra. I'm the Investor Relations Senior Officer in Siloam Hospitals. Joining us here in the webinar and live here is Lippo Karawaci, the Deputy President Director of Siloam, the Managing Director of Healthcare Business and Investments, Pak Daniel Foa, who join us via Zoom, Siloam Chief Financial Officer, and Mr. Joel Ellis, the Investor Relations over there. So we are back again at Siloam Homecare, the comprehensive cancer most premier hospital for cancer treatment. And we're also joined here by the esteemed sell-side Asia. Analysts for joining. So we have Arka from CESIMB, we have Ari from Kadesus, we have Robert from Ciptadana, Pak Randy from BCA, Pak Jono from Hana Putirai, and DBS. Thank you all for coming. It's a pleasure to welcoming all you here. Back to Ari.
Thanks for the intro, Willie, and welcome all the participants who are joining us here and also through Zoom. As usual, we'll have 2 sessions for this call. First, Siloam will be providing a brief on the results, followed by a Q&A session between myself and management. We'll be opening the floor to questions for those who are in person and also joining through Zoom. So if you have questions, feel free to enter them in the chat box. Go over them after we finish with the initial set of Q&A. So for those of you who are asking the questions, please state your name and the company you'll be working along with your question. And then please note that whenever me or management refer to the quarter-on-quarter or year-on-year growth, we're referring to the 3rd quarter of 2022, unless otherwise stated. So without further ado, let's kick off the session today. I'll ask Daniel, who's joining us online, to provide a brief on the financials and operational results.
Physically today, but I think we do have very strong financial and operational results to update to you for the 3rd quarter of 2022. Just as a summary, if we look at revenue compared to last year, but quarter on quarter, it is a 6% decrease. But however, keep in mind that during third quarter of 2021, it was really a COVID Delta quarter, whereby the COVID contributed strongly to the revenue. But in 3Q21, the COVID made up 36% of revenue compared to 3Q22, where it only made up 3%. So in a sense, I mean, base case has to rise by over 30% in order to get to a revenue positions that we are in right now. Despite the fact that the revenue has dropped 6%, you will notice that EBITDA is flat compared to last year. We booked at 574 B. This is as a result of various initiatives that management has taken to improve on its EBITDA margin. As you can see, the margin for 3Q22, so we now sit at 29.4%, up from even the 27.9% that we were doing last year. And I think this is certainly above the guidance numbers that have been provided to the market previously as well. The revenue intensity similarly has improved quarter on quarter as well. If we look at the average revenue per occupied bed, it has improved 18% compared to what we were doing in 2Q22. Basically, that is cementing the fact that the base case recovery is on track and is on progress quarter on quarter. Now, I think more interestingly, if you would look at net profit, EBITDA is lower by 1%, but net profit actually grew by 2% to 244 billion. EBITDA improved by 40% and the net profit improved by 120%. In other words, basically not only the revenue improved, but both EBITDA margin and net profit margin has improved as well compared to previous quarter. Again, a lot of that has been led by the recovery in base cases as COVID falls away, as management catch up on a lot of clinical program that in the past has been postponed due to COVID. And also the improvement in the Bali hospitals has also helped in improving the performances quarter on quarter as well. If you look at the monthly revenue and EBITDA, and I think the growth is especially more pronounced from second quarter onwards. The revenue has been improving on a CAGR of 3.8%. As you can see, the EBITDA has been growing more significantly at a CAGR of 11.7%. EBITDA margin has been stabilized at around about 28-29% mark over the past few months, and as a result of, as I mentioned, I mean, various improvement initiatives that management has undertaken over the past. Operational results are similarly strong. If you look at inpatient admission, is up 18%. Outpatient is up 18% as well. Occupancy currently sits at 64.4% compared to 55.1% in 2Q22. Inpatient days has similarly improved from 188,000 to 220,000 days, an improvement of 17%. If we look at the 9-month results, currently the 9-month result is still below last year. Revenue is lower by 9%, EBITDA by 10%, and net profit by 17%. However, you will note that the gap has narrowed compared to last year when we look at 9-month 22 versus 1H 22. And we do believe that the gap will continue to narrow when we get to a full year 2022, as Q4 is likely to be to outperform last year as well. EBITDA margin is resilient at 25.9%, almost 26%, with operational cash flow of 1 trillion. And we now sit at a very strong net cash position of 1.2 trillion as at of 9-month 22. Again, this is if we were to look at the CAGR from 19 to 2022, what's interesting to highlight is that if you compare to last year, obviously revenue, as I mentioned before, has decreased, and so has EBITDA. Yeah, but the gap, as you can see, narrow from revenue down to EBITDA, down to net profit with regard to the year-on-year deficiencies. What you then notice is that the operational cash flow has in fact grew, compared to 2021. So despite the fact that EBITDA and net profit are still marginally lower compared to last year, you will note that as of 9 months 22, the operational cash flow has actually improved by over 10% in comparison to last year's positions. And this is the result of, again, various initiative management has taken to improve on working capitals. Inventory days has dropped from 45 days to 30 days, receivables from 62 down to 43 days, payable days is static, and as a result, working capital days has dropped from 44 days in 9 months 2021 to 9 months 2022. Receivables has benefited from payment from COVID and from BBGS, but at the same time, various initiatives has also been taken to improve on the collections for non-government receivables as well. Inventory days, there has been a specific initiative which I have informed some of you previously to reduce the inventory holding days by improving on the min-max calculation level and keeping the optimal level of stock at each of our hospitals. As you can see, that has yielded results and us being able to decrease that from 45 days previously down to 30 days. So that's all from me with regard to the financials and operations update. Maybe I'll pass the time over if Ari, you have any questions.
Daniel, so I'll start management.
Hello.
Siloam with the profit in the third.
Ari, I can hear you. I think.
Can you hear me okay?
I still can't hear you. I see you trying to say something. I think the microphone is...
Daniel, can you hear me when I speak?
Hello?
Can you hear me now? Is that any better?
Yeah, Willie, I can hear you now.
Okay. Go ahead, Ari. Please try again.
Okay, great.
Hello?
Daniel?
Yes, Ari.
Okay.
Clear.
So yeah, thanks. So I'm going to start the Q&A session.
Ari, I lost you again, sorry.
Let me just use Joel's mic.
And it might be this Wi-Fi connection.
Oh, got it. Daniel, can you hear me?
Yes, beautiful. Crystal clear.
Okay.
Thanks.
Okay, sounds good. So thank you for the updates, Daniel. Q&A session here. So first, well done for Siloam with the all-time high net profit in the third quarter. So to kick off, do you have any updates regarding the margin targets for Siloam at this point? I'll start here. Thank you.
Well, the margin target, as you can see right now, I mean, we are certainly performing ahead of what we were doing, even compared to the guidance that I was giving to the market earlier, and we were certainly performing above last year as well. I think there were some concerns initially, understandably, that the margins that we were doing last year how much of that is due to COVID and whether we're able to sustain that going forward. The fact that, 3Q's margin is stronger than last year, I guess should confirm that questions, in that really a lot of the initiative improvements that we have done in the past, I think if you were to look at last year, we spent substantially more on the PPE, on the personal protections, and on the staff testing in order to safeguard the safety of our staff. And I think what you notice is that as a result of COVID subsiding, a lot of those costs comes out. And I think a lot of the initiative that we've done to improve on, for example, material costs and OPEXs, you can see more clearly this year. So I think we are very pleased with the results that we see in 3Q, because that affirms that we're able to improve the margin year on year, even without COVID. So basically, we're optimistic that the margins that we're doing right now, we certainly are trying to do more and trying to be able to build upon that. But certainly this margin that you're seeing, as I showed you earlier, really month on month, it has been stable, and we want to be able to continue to improve on that going forward.
Let me add to that, Ari. I think a significant part is covered by Daniel. See, last quarter, you remember, GOR per productive day, right? And that we always monitor, and that gives us a health of business on a daily basis, right? So vis-a-vis, actually gone up about 10%. Significant change. Now, whatever number of days we have, of course, the revenue will go up multiplied by the GOR. So we were hovering at about 29-ish per productive day, and we are now in the third quarter, we achieved about 32 plus per productive day. So one, that has a favorable impact to the margin, because the higher you sell, the margin is going to be higher. Second, while Daniel spoke about the cost side of it, very favorably, our mix is, at 40%, we started to think that the contribution from insurance and corporate, guess 45, 46. That, as you make the business become more sustainable. Three, we've been able to do a lot on the material cost side. There is significant saving that we are now starting to see with multiple initiatives that we've started across the company, because the focus has been shifting in this year. And that's, again, a very sustainable. So while previously we've always guided that 25% is a good number to look at, but forward we feel that our margins will be higher than that. And what we are now seeing is the way we see it.
Thank you, Varun and Daniel, for the color there. So the follow-up question would be on the, in terms of the momentum, in terms of the monthly volumes and revenue. We've seen consistent uptick since April. So how do you see that trending in the fourth quarter?
Yeah, so Daniel, allow me to take that. I think you see that between April and September, we've anyways seen an upside. There is a CAGR month-on-month basis, which is at 4%, right? And our business is going to continue to show us this incremental momentum. If October is to go by, we've only got stronger. And I'm very sure that we will end the fourth quarter stronger than we believed previously.
Glad to hear that, Varun. And in terms of the revenue intensity, you mentioned about some bright spots, right? Can you point out if there's any specific therapeutic areas that are doing well, better than others?
And I think, do you want to talk about that, Carol, the new clinical programs that we've kind of added, which have grown? Yeah.
Thank you for that question, Ari. So Varun's explained a few things around, and Daniel has as well, around revenue intensity. Of course, there's a favorable impact to the annual price increase that we do. Our volume, the payer mix is shifting, as Varun's mentioned as well. The clinical acuity and case mix is shifting as well. And this is due to the clinical programs that we've been building over the past few years. I mean, we've been talking about IVF a lot, but now we actually have numbers to show, and very favorable numbers as well. We have 250 pregnancies. We've already delivered 120 babies born from 2 centers. And the success rate from IVF is above the international standard. I honestly don't know how this doctor does it, but as long as he keeps doing this, we'll keep on investing in him. So these clinical programs are giving us returns. Our kidney transplant program, we've done the 200th kidney transplant on October 28th. Again, also above international benchmark in terms of outcome. And we have actually been formally appointed by the Ministry of Health Kidney Center, the only transplant center in Indonesia. We're also developing our programs in other specialties as well. And working with we've been diamond status, which is the highest status. So acknowledgement for what we do as well. In this hospital, we've just launched our breast cancer care alliance. Breast cancer patients. Why? Because the prevalence of breast cancer in Indonesia, the need is, we are in a position to do it. We have the experts, we have the expertise, we have the technology, and we know will continue to grow, and we want to make sure that we hold the patient beginning to the very end. And we are also clinical trials that we've started this year, and so we are in globally with Novartis, Telix Pharma, a few other, also IQVIA and NCGS from Japan, and this will help us open up the access of care, but it'll also benefit generating as well going forward in the future. I can take up the whole session talking about how our clinical programs are contributing to this. Obviously, we don't have that much time, but our clinical programs are, and so what you see with the volume coming back is two things. One is strategy, and so we'll continue on that strategy. It's clear that the execution is as per plan, and so the strategy is right, the execution, we're seeing the fruits of these two things, because I know your next question is it sustainable? And that's going to be the next question. But because it's something we've been planning, then we can say, yes, it is sustainable. So thank you very much for that question.
Ari, a couple of other clinical programs. You see the kind of growth that we've seen. Our quarter on trailing quarter growth on OPD is 18%. Only the OPD side of it and not IPD for now. This OPD will bring in, we generally see a momentum which gets built up on IPD about a quarter post the OPD numbers start to go up, right? So, significant indicator that some of this business that we are seeing now is here to stay. We've in the past. There's a lot of change in how people are perceiving Indonesian healthcare now, especially at Siloam. A lot more people in Indonesia, and we've said this over the last 2, 3, 4 quarters. We've been talking about this because each quarter, the trends are showing us that a lot more people prefer to be with us in Indonesia than go abroad for treatments, and I think that trend is going to change and be in healthcare in the next decade.
Varun, would you like to talk a little bit about the digital initiatives? So adding to our revenue intensity, as well as the volumes that are coming in, which is quite a significant volume that we are seeing coming in from the initiatives over the past 2 years.
Yeah, thank you, Carol. So while we've spoken about intensity, I think channels do matter. And in current day and age, so we've spoken about our over the last 2 years, our digital network of acquiring patients has become so strong that we've now hit a number of 18% acquisition happening. This number again is growing quarter on trailing. Telling you that we were about 15% in quarter 2. Quarter 3 has been 18%. Why is this happening? We've got almost 1 million downloads of and I can tell you it's the best healthcare platform currently in Indonesia. We've got cumulatively 6.5 million sessions, right? So that means it's not only the downloads are happening. We've got about 100,000 plus active users each month on the platform, and our engagement sits at about 77%, which is phenomenal. That's given the content. We're making the app and the website much more relevant to patients' needs, and which is where I think also gets significantly impacted in our favor.
I'd like to add home care onto that, Varun, because most of our home care patients are digitally acquired. We have done 50,000 services, 51,000 patients. That's not a small amount. I mean, that's like a small hospital. So a lot of people have seen for themselves what we are capable of doing when bringing our service. It's a convenience for the patients. They are discharged early. It makes sense for us. It's also improves profitability for us whenever we are able to bring in home care. We have a large number of our doctors and our nurses available on the home care platform, and our home care services range anything to vaccination, wound care, nursing care, oncology care, post-surgery care. We do post-transplant care, at-home maternity packages. And the list goes on and on and on. And we will be bringing more and more to our home care platform in the following years.
Thank you, Carol and Varun, for the very helpful color there. So just wanted to follow up regarding the progress of penetrating more of the private healthcare insurance. Seems like that's one of the levers of growth, at least in the past few years. So just want to get the since after COVID, penetration continues to increase.
Yes, we told you last time that we've brought in some interventions to make our account management even better. We've rolled out the CRM, Salesforce, and the results are there to see. The third quarter, our contribution from BAM is about 45-46%, and on a blended basis, and up from 40% in quarter two. So again, Ari, we've said that we don't know what the real mix is, but if we are able to generate this level of engagement with our corporate customers, with our insurers, and deliver half of our revenue, that segment is phenomenal. You have to be mindful of the fact that when we get so significant revenues from insurers and corporate, that only 10 million. As insurers penetrate further to access more patients, I mean, this will be a very, very significant, again, that will continue to favor us. Our BPJS business is sub 20, is about 18%. There are out-of-pocket patients have also continued to come in. So mix, yes, indeed has been a very favorable quarter as well.
And also in regards to the looking at the pipeline of hospitals, any new we can expect in the next couple of years?
Yes, of course. But a message that we've been telling everybody that we're going to be active in the hospitals that we roll out. We have a few in the pipeline. We are still in the process. That's going to be Makassar, that hospitals where we're rational to pass a certain threshold for IRR. It goes through the whole governance process, really choosing markets where not only we are not present, but we can also have high growth as well. So this focus on as Jakarta, Surabaya, Bandung, where even though we are not in Bandung, we are still adequate in some of those areas. More from us in
and expansion is not only we've always said that infrastructure expansion, technology expansion, 65% occupied, 5% occupied on a blended basis, which is good given the fact that we were hovering about 55%. But there's a lot more to do. We can still continue to about 80-85% without expansion, and that can be done by the programs that Carol's a lot of technology and infrastructure. We are said this in the past as well. Technology is a big space for us. Realize that one, we're doing the need from the market is high, and three, our ability to manage the patients is as good as anywhere else in the world. You'll continue to see a lot as well in the next few quarters.
Glad to hear that. Thank you, Carol and Varun, for that. And in regards to the business, any and of course, people are expecting the possible reimbursement rate hikes that have been long overdue. So any specific updates on that?
So there are a few things that we're anticipating. One is a rollout in the standard tariff. Changes in regulation will be favorable for us. And in fact, I think it's being government hospitals, private hospitals, and then they'll roll out to all the private hospitals. So that's something that we can see in the pipeline. It will be an uptick for our profitability business. The second, obviously, is the adjustment of tariff. The government that tariff has not 7 years. This is not sustainable. Quality if this does not get changed. So it is very last stages of being rolled out. We are anticipating, based on what they've already about a 10% increase in tariff, which would go to our bottom line.
Got it. Appreciate the color there, Carol. Speaking of inflation, like how do you see the impact? Of course, we've seen the fuel price hikes having impacting the September, October. So do you expect that to be for Siloam?
Well, Ari, we're all world. So there are three elements to this. The first is inflationary for us. It's unfortunate, but that's how it works. So whatever comes to us from an input pharma cost standpoint, consumption standpoint, becomes a pass-through largely. So if there is any inflation account of that, it doesn't really impact our P&L as much. Then we have, of course, our operating expenses, and we try and mitigate some of those through price increase, which we've been very consistent with. And I think I also want to allude to the fact that our is creating a lot of good on the P&L side. That's also, keeping a check on the bills for our patients. We've grown our volume without adding too many people. In fact, vis-a-vis last year, we've optimized our required to add a lot of the COVID. So that efficiency is also helping us mitigate some of the cost pressures. So are you going to see a very significant impact on account which is adverse? Absolutely not.
Got it. Glad to hear that, Varun. And then basically also a question on the kind of Bali hospitals. Like, looks like there've been some rapid recovery there. How do you see the progress in Bali and also even Labuan Bajo, for example, we arguably could be seeing some uptick on tourism as well?
Yeah, so Bali first, we certainly did get impacted last year, and some of you were asking us questions as to what are we going to do with our Bali hospitals. Loud and clear, nothing. They're back to, in fact, if you see the numbers, I think we've done an EBITDA of 78 billion coming from the Bali hospitals. And the entire of last year, we were struggling. The EBITDA, I think it was a range of single digit to 14, 15 billion blended on a quarterly basis. So we're up and running. Again, the tourists prefer Siloam and Bali, and our business model shown significant resilience to pre-COVID levels, but there same level of volume as more and more people come to Bali. Continue to see favorable, and they do about the EBITDA.
Speaking about tourism, Varun, we are actively supporting the government in sites that they've identified as destinations. I know that there's a lot of money pouring into the government because to grow tourist hotspots, and we are actively working with the government for that. Obviously, we're in Labuan Bajo, also Medan, Jogja, where a lot of 20 events in Bali. We are also the BIMC Nusa Dua. This event goes smoothly, and so as tourism grows, because tourism is an industry actively pushing, then we will be riding on that wave as well. And you can see the number of expats coming to Siloam actually has grown 1% before the pandemic, and now it's about 3%, representing 100 different nationalities. So we know that we are tourists and foreign nationals living in Indonesia as well.
Got it. Thank you for the color there, Varun and Carol. And then with that, any bottlenecks on constraints on availability of doctors? Because of course, there's always been constraints the medical tourism.
nothing new, and we don't tend to focus on things that are too far of control, right? We focus on what's actionable for us now. Not that we're not doing anything in that area, but I think that in a country where there's a large constraint of 30. I don't know if you guys know that. We have 36,000 specialists in Indonesia, only for 270 million. Now, I've heard it's a different number, 45,000, but 36,000, 45,000, what's it to need, like what? Need now. And the population is growing and everything. In an environment, we actually engage of the country's specialists. And so we have in our system already with 11% of the country's cardiologists, for example. And so we're able to build these centers of excellence and create clinical programs that are unique, that draw foreign nationals to us. Now, there are, when we talk about medical tourism, there are a few we need to differentiate. One is foreign nationals in Asia accessing care. Number two is tourism happening to need medical care, usually emergency situations. And the third for medical care coming to Indonesia. Now, we do all three. You know, there are numbers that we can share with that, but we actually, yes, of course, it would be great once that changes for our country, but is preventing us from growing tourism and bringing more foreigners into.
Understood. Thank you. So I think we've already covered a lot of grounds here. So thanks a lot, Bu Caroline, Pak Varun, and Pak Daniel. Before we move on to the Q&A on the floor, would you have any closing?
A lot of interesting things happening in the small things happening in very remote areas in Indonesia. We just opened our 7th clinic in Papua. There was a baby born just in that clinic recently, and just brings us so much joy. Outreach that we're doing and opening up the access of care. But on the other hand, you know that we are also serving the premium class of Indonesia, cutting edge technology and acute services to Indonesia as well. We just finished our reaccreditation in 3 of our hospitals, LV, Pasar, and Kebon Jeruk, making sure that we continue to on a global stage. Celebrated National Doctors Day just a few days ago. Are our strength. Specialists in are our strength. Continue to develop clinical programs. So I guess one thought that I would like to leave with, again, single earnings call to remember is a company with very strong fundamentals. Is in a landscape that is, there's huge scarcity in terms of facilities and specialists, experts, name it. And it is an area where we have significant capability as well, and is not so low. Again, with the right execution, continue to see the results that we're doing, and yet again also creating such a huge impact to the people of Indonesia, and that's what gives us the greatest joy, right? I mean, it is a sustainable business. It will continue to grow. The way we are growing is related to fundamentals that we are building, but we also have such a huge impact on our country, and it is a privilege for us to be in healthcare in Indonesia, continue to serve our citizens and countrymen. We will be here for Indonesia, and during it's gone through COVID, peacetime, I hope. I mean, a lot of uncertainty. Continue to try many challenges to grow healthcare in Indonesia, and you know that we are in the right position to do that. So it's something I wanted to leave everybody with. Thank you.
That's very clear, Bu Caroline. So thank you all for the time. So now we're opening the floor for questions. For participants joining us, raise your hand and give you the microphone. And then for those who are asking questions through Zoom, please type in your question in the
Thank you, Pak, for the presentation. I'm Robert from Ciptadana Securities. I want to ask regarding the progress of your Siloam Agora, the managed service business. And do you have any plan for the upcoming years to continue that strategy? And secondly, I want to ask regarding the beauty clinic in Bali, the plastic surgery clinic. How do you see the demand in the upcoming years, and how do you see the progress so far of that plastic surgery?
And then you can supplement whatever I don't cover. It's going as planned. The ramp up is great because obviously it's in a great market. We know how to ramp up these hospitals. We've gotten the specialists on board. We are building to our center of excellence in oncology and mom and child. And so that's going very well. As to your question of whether we would do similar projects with this model, the answer is yes. Because again, it allows us to enter markets where we are not yet present. And it is cash flow positive on day one. And it allows us also to optimize on the strengths of our partners in areas where we may be not strong in. And so the ramp up will be higher. So yes, we will continue to have other hospitals of this model. You want to, anything else you want to add before we go over to the
I
Bali?
think you've adequately covered the franchise model. The second part of the question is actually something that we spoke about last quarter again. The plastic surgery program is a very significant program for us in Bali. Not only in Bali, we are actually doing some cosmetic work in Jakarta as well. And the ramp up has been extremely good in the last 2 quarters in Bali. Right, as people can travel into Bali, that becomes a preferred destination. And having said that, our clinical talent outcomes are also outstanding, which is where there's a lot of repeat cosmetic work that repeat and referred cosmetic work that is coming to us. So we don't report the numbers separately for each program, but I can tell you it's a sizable program for us. Any other questions in the room? Something on the chat.
If anyone on the line has a question, please kindly input your question into the Q&A box provided, or raise your hand and then we will unmute the question. So once again, anyone who is on the line, please either input your question in the Q&A field provided, or you can raise your hand and then we will unmute you so that you can ask your question live. Once again, does Ari or anyone else here, before we go to the floor, because it looks like at the moment people are still thinking about their questions to ask, does anyone here have any further questions they'd like to ask? Sure, please go ahead, Ari.
I'll take the pleasure to ask
Sure.
more. So basically now that we're approaching the year end, any thoughts yet on 2023 guidance, or basically puts color on the growth heading into next year?
Sorry, it's a very unpredictable world, right? With so many versions of various viruses that we keep hearing about. And as you know, that we don't like giving a guidance. Our business is to keep people healthy, and therefore we refrain from guidance. What we can tell you, and I think you must have, you've already Daniel have said. See, our guidance is very firm. And our execution has been perfect to a fault, which is where we've been able to bring back business to the level that you see now. If you compare this to hospital companies, hospital groups within Indonesia or outside, this is a significant outperformance, right? And we see no reasons to say that going forward, this won't continue. So I think this outperformance is going to be the order of the day. With what we are doing, we are very clear that from a strategic capability standpoint and from an execution capability standpoint, also supported by adequate capital, we are all set to continue to grow this market and outperform the industry as well.
Appreciate the color there, Varun. And then just to follow up on that, it's like already closing about 1.2 trillion. So given that new hospitals wouldn't be the key priority, meaning focusing on a base business. So what would be the other key priorities for Siloam?
In 23?
Yeah.
So actually, Ari, actually we are baking them as we are going through the budgeting process. So it may be a little premature to talk about how we're going to deploy cash, but our priorities are not, guidance is not changing, and I think we've already spoken about Siloam 5.0 with you. It's a longer term plan. So allow us another quarter. As we announce the annual results, we'll also give you color in terms of how we're spending cash, because we are going through that process. But I don't know if Carol and Daniel, you'd want to add to that.
I think that's Q4. We're not supposed to say anything on that now. But I think that what we've been saying, we will be consistent. We want to be good stewards of our cash. Of course, this cash then allows us to do things that we haven't done in the past. So of course, part of the cash that we're going to deploy for revenue maintenance, making sure the lights are on, the building is maintained, we continue to support the doctors and medical equipment and everything that they need. There are always going to be investments in our clinical programs, but that'll still leave us with quite a bit of cash. Now, we're doing a lot of analysis on what our best scenario is on the use of that cash, what will give us the best returns, have the best impact on our bottom line, also keeping in mind some of the priorities our investors have in mind. So keeping all this in mind, we want to come up with a plan that is going to be the best use of our cash, which is why we're hesitant in sharing. So that we can share a more clear plan for next year, but we are mindful of some of these things. But again, the cash that we're sitting on, it allows us to do other things that we haven't been doing in the past and be a little bit more bold in some of the areas where we know that there's a return to be made.
Yeah, and adding to, I think Carol's revealed quite a bit. Yeah, no. From a priority standpoint, I think what we've been thinking, that complexity and the clinical work that we do will take precedence over anything else. We do realize that it's incumbent on us as a leader in the healthcare space to develop centers of excellence where people can be treated and they don't have to travel abroad.
Understood. Thanks for the color there, Bu Carol and Varun. So my last question is in regards to the kind of market share dynamics. Seemingly that Siloam is outperforming peers. Of Siloam versus there could be some share gains as well. Of course, yeah, it's tough to assess the exact numbers, but any color on that?
It should be you who should be telling us. In our assessment, we've seen competition results. We do feel customers also do tell us, and I think we'd like to say that they prefer us. They prefer coming to Siloam, and that's more important to us. From a standpoint, we leave it to you to come out with your reports and tell us what's the share movement within the industry.
Got it. Well noted, Varun. Thank you for that. So I think we're already coming close to the almost the hour here. Does management has more time, or we're pretty much set?
We can go another 10 minutes. That's fine.
Okay. Yeah. Just want to check in if the participants in the room have additional.
Hi, my name is Baruna from CGSIMB. Maybe I missed this, but just I have a question about what drives the quarter-on-quarter inpatient volume?
The increase in volume?
Yeah, the inpatient volume. Yeah.
For the inpatient volume, things that are favorable to the inpatient volumes. One, the number of productive days, of course, was higher in quarter 3, as we told you. Second half of the year is generally more productive days than the first half of the year, so that's one favorability. Two, I think Bu Carol did allude to that, but I think I want to emphasize on that point. A lot of people who would, in normal scenario pre-pandemic, they want to stay in Indonesia because they've realized during the 2 years of COVID that a lot of what they thought couldn't be treated here can be treated in Siloam. So that's one big trend which is continuing to. The is some of our centers of excellence are drawing, than ever before. Oncology, cardiology, neurology, neurosciences, urology, and fertility, to name a few. We believe we are gaining significant share in the marketplace as well. So all of these factors coupled together have actually led us to get significant upside in both outpatient growth and then the related inpatient as well.
So I want to add, I think that people feel more and more comfortable coming back to the hospital. To say that that's, and so we're seeing some of the medical cases, the gastrointestinal cases, the unspecified viral infections, and all of that coming back to the hospital, and so that's been a tailwind for us. Number two, writing on what Varun said on the clinical excellence as well, you should take a look at what our cath lab endoscopy. So it involves the utilization of our larger equipment has gone up. Only be if the case acuity has gone up. And so I don't know if you have that number, what it is. How much is a surgical grown?
I don't have the mix offhand, but we will provide them the mix in our.
Yeah. And all that, everything has gone up, and so that is driven by clinical services now. But what I think that Varun touched on, I want to touch on this as well. There are maybe two things that is going to drive growth going forward in inpatient occupancy. Number one is that we are seeing more outpatient growing, and so inpatient comes after. In the past few months, it kind of hasn't been like that because there is some of the pent-up demand, and people have needed to go anyways. But usually outpatient first, and then after outpatient, they become an inpatient, and maybe then they become a surgical case. And so, because we are seeing significant growth in the outpatient, we know that the inpatient will follow. And number two is we are seeing that there is volumes. We are adding capacity, selective. Hospital in specific hospitals, specific classes, bed class, for us to be able to take more volumes. Two things well, inpatient volumes in the coming months. And
Or online. So just follow up on I think the data point. I think Varun mentioned outpatient volumes growing about 18%. Is that on a Q-on-Q basis?
That's quarter and trailing quarter.
So any particular across various therapeutic areas?
It's across the board, but if I was to tell you a few craft groups which have, which and the others, pediatrics has come back in a very big way, because that was one craft group that was lagging earlier. So that's really, medicine is back to the numbers which was pre-COVID, and some of the surgical mixes, surgical specialties, centers of excellence that Bukhara is seeing significant favorability from a number standpoint. Urology is another one such specialty where we've seen the last 12 odd months.
Got it. On the other hand, any areas that seem to be like
we could do better, certainly. Obs and Gynec is one such craft group where I think we're going to build more capability, capacity, and clinical talent. And the other one that we are looking at is digestive surgery. These are two craft groups that we've identified where we could be significantly better. Of course, and constant improvement in our clinical programs is the order.
I wouldn't say that they're lagging. It's just that a lot of just grow to specialty as we're looking speciality, we have identified these two craft groups as opportunities for us to do more in the market. I can't think of anything where I would say we're lagging or we haven't come back or there's been a serious loss due to Dr. I can't think.
Okay, good to know. Strong growth across the board. Yeah. So just to follow up, and probably my last question, working capital days, right? It looks like a very on your as a function of the revenue dropping, or even a function of BPJS paying faster since there's a surplus, or higher mix of private. All of the above, basically.
Dan, you want to get this one?
Yeah, I'll take that. On AR days, well, certainly I think it's a mix of both. Certainly the BPJS days have been coming down steadily. But I think in addition to that, the non-BPJS days have been dropping as well. On the other side of components, you can see the inventory days have also been dropping. The only thing we kind of maintained really is more the AP days. So I don't think it's just merely an external effect. I do think it is internal as well, based on what we have been doing. Again, coming back, your question is, well, is this sustainable and is it going to get better? Yeah, I would say yes to both questions. It's something that we will still continue to work on as well. Maybe Ari, just a quick closing comment. I mean, just from me, the others may have others to say, just based on some of the earlier questions that you've asked. 2023 is going to be very uncertain, but the healthcare is obviously a defensive stock in that matter. I do believe that a few things has happened since the COVID days that has definitely improved the prospect for the healthcare businesses in Indonesia as a whole going forward. The first is that I think people are now generally a lot more health conscious, understand the importance of the medical checkup. We certainly have seen a big uptake back in medical checkup after COVID is over. But the awareness of the need for insurance and so forth, we do generally see that has improved, due to obviously COVID. And the second point that I think will continue to be a tailwind forward going forward is the fact that a lot of customers that would always have, without fault, go overseas for medical treatment, we've been able to capture some of those markets. And the questions have been asked as to when the travel starts opening up, with a lot of revenue starts falling off. Again, we are not seeing that trend at the moment. Our performances at, for example, MRCCC are still very strong. So I think those are some of the tailwind that would help us going forward. And a few things I think just for the analysts to take into considerations as well is our operational cash flow generation capacity is very strong compared to what we were doing previously. In addition to the fact that we have close to no debt. In addition to the fact that obviously we have been able to prove to the market our ability to operate new hospitals opening effectively without significant losses. So that put us in a good and strong positions to be able to look at the expansion opportunity, again, without going into specific and without going into details. I think those are some of the fundamentals I mean to be taken into account when you do your analysis.
Also want to give the floor to other management team members to provide closing remarks.
Sorry, and everyone else. Thank you so much. Thank you so much for your support. We will continue to deliver and outperform the market, is what we believe. And we'll come back to you next quarter. Thank you.
I think I already gave my closing remark. I think I don't want to sound like a broken record, but yes, I mean, we're very proud and thankful for what we've been able to achieve. And mostly also thankful for the support of the people in our organization. They are the heroes. They're the ones that make our dream a reality. They're the ones in the trenches every day. And we are especially thankful for the support of our investors who are with us quarter after quarter, year after year, believing in what we do. And I hope that with each passing quarter, as we continue to show that we are delivering what we say we would, that our investors will, the confidence will grow as well on the plans that we have for the coming years. And so we look forward to sharing with you more good news in the following quarters. Thank you, Ari.
Sounds great. So thanks again for management for hosting a very useful session here. I'd like to also thank all the other analysts who have attended the conference, the session in person, and also those joining through Zoom. So we'll see you again next quarter. Thank you.
Thank you.
Thank you very much. We all appreciate having you here.
Thank you for coming in person.
I know. Last time was